Hey everybody, Mike DeCepoli, Heritage Financial Advisory. Welcome to Heritage Insider Weekly for Friday, November 1st, 2024. Hope everybody had a great Halloween. Welcome to the month of November. Just 2 months left in the year of 2024. Where has the time gone? We are back to update you on the markets and the economy. We had a jobs report today. We had some critical earnings reports from big American companies this week. So we're going to cover a couple of the highlights here as well. We'll talk about the market and how things are shaping up with just a couple days now to go to the election next week. So we'll start with today's jobs report, which was significantly impacted by two things. All right, you see the headline there. U.S. added just 12,000 jobs, right? We're used to, seeing this number 150, 180, 220, 220,000, right? So 12,000 would catch you by surprise and say, what exactly is going on here? So the Boeing strike and the hurricanes in the eastern and southeastern regions significantly impacted these numbers, with a lot of people either being out of work or unable to work. So market, not much of reaction around this. The more important jobs report now will be a month out to see if do we revert back to a normalized job growth trend, right? Or is this something that spells to a bigger issue? So I think 12,000 is the outlier, so we'll check back in next month and see how things look. We had earnings yesterday from Amazon. Phenomenal earnings report. Shares up today, pushing all-time highs, about $200 a share, 7% higher, showing an earnings beat and exceptional cloud growth, right? So, we know very well, but maybe a lot of folks out there watching perhaps don't know. You think about Amazon, you think about the trucks bringing packages, to your front doorstep, right? And that's obviously a big part of their business. But the cloud business is the faster growing unit of their business. They've made a lot of significant investments into cloud over the last couple of years. And for a great period of that time, a lot of investors and Wall Street pundits thought perhaps they were investing too much in cloud and would not get the returns on it. But we're seeing that validation now as shares look to move to all-time highs. We also heard from Apple yesterday. Always an important report when the largest company in the world reports earnings. Again, really good results from Apple. Very strong and steady as always. Seeing good growth in new products. And the big takeaway is that their services unit, right? You think about the services that they sell you, whether it's Apple Music, apps, things in the App Store, right? That unit alone is a $100 billion a year business, right? So just to think about the scope there, the scale, if you took the services unit out of Apple and made it its own company, the thing would be close to qualifying for the S&P 500. So it's just truly remarkable what that company has done. Stock is down maybe 1%, 1.5% today. If you know Apple and have followed it for a long time, they never really get the benefit of the doubt when they report earnings. You usually see it slightly flat to down on earnings day, and then in the days and weeks to follow, when people actually do the work of reading through the numbers, and they'll realize that this stock should be moving higher. So two good reports, one up, one down. So let's take a look at the market and see how things are developing here for us. So we had a down day yesterday, a nice hit to the market. Bears stepped in there, did some selling on the backs of some earnings earlier in the week. And again, nothing's really changed much in terms of where the market sits. It's a little bit lower than it was when we did this video a week ago. Working on a positive day here today, so we'll see where we close. It's still about halfway through the day. But starting to see a little progress on our track towards a correction here, right? So again, as you know, unchanged, unaltered. This is how we've drawn it out. Last week, 2 weeks ago, it looked like, perhaps markets were going to begrudgingly just steamroll themselves higher. And now you kind of get that trend line break. And so we'll see where we go from here. Our view still is that you're going to get a correction. I think that'll be accompanied by perhaps the election taking a couple days to sort itself out, right? Which does not seem to be something that's unexpected at this point. Several states are already saying it's going to take a few days to work through the results and all the mail-in ballots and what have you. And so that's a scenario I could see the market correcting, just simply because the market doesn't like unknowns. So if you get a clear-cut winner on election night, either way, then perhaps you'll see the market react much more quickly and promptly. But I could see a scenario here where we do tread lower as things work themselves out. Obviously, people are going to be a little hesitant to really put new money to work, given the fact that the election's only a couple days away, right? So if you're a brand new investor looking to jump in the market today with 2 feet, you'd probably just wait until next Tuesday or Wednesday, right? And so that type of mentality is what makes markets a little bit softer. So we'll be prepared if we get the dip that we're looking for. We'll be prepared to buy it, right? We bought the one in August, we bought the one in September, and we'll buy it again here if it happens in November or even into early December. So no change in plans, no change in the direction that we think the markets are going. I think that they'll look to get one more pullback in here before we move higher into next year. Also, when we look at some of the data along with this, a lower October, we just closed October down slightly, about 1% down, so much better than last year's October, but nonetheless down a little bit. And we look at a lower October is very normal, right? But so is a strong November in an election year. So perhaps we get that sell-off, a little pullback into the early mid part of November, and then we start that rally on the back half of November into year end. So that continues to be what our view is. Also, let's take a look at investor sentiment. Always important to keep an idea, keep a track on where this sits. And we got exactly what you thought you would get after the market pulls back. So 2 weeks ago, right, it was 74, very greed oriented. A week ago, with market slightly down, we got it back to about 60. Again, still skewed to greed. Sell off yesterday, here we are neutral. Okay, so again, I feel like a broken record, but this is the type of behavior that you want to see. If markets sell off, you want to see sentiment pull back. If markets move up, you want to see sentiment move up. When we find a break in that pattern, that's when it's going to be something that's worth paying attention to. Markets might be topping at that point, but that's not what we're seeing. So let's continue with the plan as expected. So next week's major U.S. economic reports and Fed speakers. Pretty quiet to start the week. Obviously, you have the election on Tuesday, so that's a big one. That's going to be what everybody's looking at. And then when we actually have a Fed meeting this week, right? So you talk about a big week in terms of the market just for a volatility's sake. You have an election and you have a Fed meeting and a Fed press conference, right? So remember, we last heard from the Fed on September 18th. They cut rates for the first time this cycle. No meeting in October. So while everybody's going to focus on the election on Tuesday, right, you got the Fed next week as well, Wednesday, Thursday, with a press conference from Fed Chair Powell on Thursday at 2 p.m. So there's a lot to look for next week. We have some continued earnings coming out. Most of the companies that we own, have already reported. So we'll be keeping an eye on some of the others just to see how they impact broader sectors. But a lot coming your way next week, so we'll be prepared for it. We'll update you as needed if there's anything that we feel that we need to share outside of our normal frequency. We will certainly do that. So that's all we really have for today. Not a lot of data to share, not a lot of charts. Markets overall hanging out near the highs, starting a little bit of a pullback here. We're starting to see other stocks react well off their earnings. So we'll continue to let the data decide where this market goes next. So with that said, that's all we have for today. If you have any questions, always reach out to us. Here to talk to you about anything that matters with your money. We hope you have a great day and a great weekend, and we'll see you back next week for Heritage Insider Weekly.